you, sir. Good evening, everyone. In next 10 minutes, I will take you through the company presentation. Then my colleague Vinay will take you through the issue structure, and then we will open the house for questions and answers. Thank you, sir. So as far as the in next 10 minutes, I will take you through the company presentation. Thank you, sir. Good evening, everyone. In next 10 minutes, I will take you through the company issue structure, and then we will open the house for questions. We have housing loan, we have microfinance, we have MSME. As far as in next 10 minutes, I will take you through the thank you, sir. In next 10 minutes, I will take you through the about 48% CAGR from 10,300 to 20 crore to almost 24,753 crore. During this period, our customer base has increased from 1,41,000 to almost 5,58,000. Branches have increased from 736 to 1,138. Employee strength has moved to 11,546. And PAT has moved from 204 crore to 478 crore in 2025. And in first quarter, we have done about 175 crore. Our net worth has moved from 3,500 crore to 6,339 crore. If we look at the portfolio construct, then as sir said that we are almost 100% secured lenders. Total AUM I have already said that it is about 25,000 crore, 1138 branches, 11,546 employees. Gross NPA has been 1.67%, net NPA is 0.99%, so we have a very, very stable asset quality. Our debt to equity is about 2.5, so our leverage is quite low at this point of time because we have just raised an equity of 2,000 crore in June 2026. So this is the overall market sizing. India's GDP is now close to $4 trillion. If we look back then from 2.7 trillion to $3.9 trillion, which is $1.2 trillion, we took 7 years to travel. From here on, we will add over $3 trillion only in 5 years' time. And our credit to GDP growth, GDP ratio is continuously increasing. So the market will be growing exponentially, especially the credit growth will be very, very high if we look at we achieve these kind of numbers. If we look at the various segments, there are 25,000 tons of gold, which is household gold, which is sitting in India, and only 12% of that is mortgage. So the almost 88% of the gold, household gold is not mortgage. So the opportunity is very, very large in gold segment. So is in the housing segment, there is a requirement of 10 crore house as we speak. And so the opportunity in the affordable housing segment is also so very large. Same is MSME. If you look at MSME, the organized credit is roughly around 30% of what the demand is. So there is a credit gap of 70% of the total demand where we are looking at. So the market sizing and opportunity is really big. As far as NBFC is concerned, total organized credit in India is roughly around 220 lakh crore, out of which almost 48 crore is being catered, 48 lakh crore is being catered by NBFC, which is roughly around 22%. And as per projections by 2028, the total size of NBFC would be roughly 75 lakh crore. So we are going to grow about, overall industry will grow about 28% CAGR in next 3 years' time. And if you look at various asset classes, then the entire 48 lakh crore is distributed between housing, auto, retail loans, infrastructure loans and MSME loans. As far as we are concerned, in the MSME vertical, we have around 43,000 customers, ticket size is about 12 lakh, LTV is about 53%, yield is about 16.82%, and we are present in 10 states. On housing side, we have about 40,000 customers, 14 lakh rupees is our average ticket size, LTV is about 58%, our yield is 13.62%, and total states where we are present is 9. And gold loan, we have around 4,66,000 customers. Average tickets is about 1.3 lakh. LTV is, portfolio LTV is 64.96%, which is roughly around 65%. Portfolio yield is about 18.8%, and we are present in 10 states. If you look at this graph, we have started in 2023 and within 3 years time we have reached AUM of 9,000 crores. On retail construction finance, we have 280 active accounts, average ticket size about 16 crores, average yield is about 18% and we are present in 10 states. On fee income side, we have two large verticals. One is insurance distribution, where we have about 18 life partnership, both on life and non-life side. We have done an insurance distribution premium of roughly around 128 crore last year, and we earned a fees of around 74 odd crore. And this is a good profit kicker for us, as the costs involved are very less in this segment. On car loan distribution side, we have 820 branches, 1,556 employees. Net fee income was roughly around 96 crore last year. We have 12 partners, banks and financial institutions. As far as the distribution is concerned, as I speak earlier, that we have 4 lending verticals, out of which housing contribute about 22%, gold loan contribute about 37%, 22% is MSME, and construction finance is about 18%. And geographically, we are present in Rajasthan, Gujarat, Madhya Pradesh, Delhi NCR, Uttar Pradesh, Punjab, Haryana, Karnataka, Telangana, Maharashtra, to name a few. So our largest concentration is in Rajasthan, which is roughly around 20%, followed by Gujarat, where we are 17%. And as far as portfolio is concerned, our on-balance sheet portfolio is roughly around 20,000 crore. The AUM is 25,000 crore. So almost 20% of our book is in which is into co-lending and direct assignment. On the balance sheet, 4,400 crore is the MSME portfolio, 6,200 crore is gold loan portfolio, 4,700 crore is housing portfolio, and 4,500 crore is construction finance portfolio. This is our footprint. On non-gold side, we have around 317 branches, which have moved from 174 to 317 in last 3 years. And on gold loan side, we have 821 branches as we speak. On technology side, our MD sir keep on telling that money has same value and color. The only differentiator between NBFC is efficiency, and we are investing heavily on technology to bring in the efficiency for ourselves as well as our customers. On capital adequacy, as we speak, we are at 35% on CGCL level, and on housing finance, our capital adequacy is 29%. On liability side, we have total borrowing of roughly around 16,000 crore distributed between banks and non-banks. Bank borrowings are roughly around 78%. NHB financing is about 5%. Financial institution is about 11%. Market borrowing is about 4.3%, and there is a very small amount of ICD. On ALM side, we don't have any asset risk. Our receivables, our liabilities are much longer tenure than our asset side, so we don't face any ALM challenge as we speak. Technology, as we already spoke, that it is the key differentiator between us and the other NBFC, where we have invested very, very heavily on tech and tech associated costs. On credit underwriting, we again have largely doing it through technology, where credit bureau, DDO, penny drop, QS, QCR, etc., OCR, etc., all we are doing through technology. So if you go to our gold loan branch, you will be very surprised to know that customer did not carry any paper. From KYC to their bank account validation to penny drop to disbursement to loan agreement signature, everything happens on tech. And it happens within 30 minutes time. So from walk-in to walk-out time for a customer is less than 30 minutes. On financial performance side, in last 3 years, our AUM has grown by 48% from 10,300 crore to 22,860 crore between 2023 and 25. Total loans is 9,400 crore, which has moved to 18,215 crore by 2025, and again 20,000 crore in Q1 2026. Total debt to total asset is 0.64% in 2023, which moved to 0.69, and now in 2025 0.75. So we have a very, very healthy asset cover as far as liabilities are concerned. Our PAT moved from 204 crore in 2023 to 478 crore in 2025. In first quarter one, we have done 175 crore of profit. Debt equity ratio is looking at 3.6 in 2025. Post that we have done a fund equity raise of 2,000 crores. So as we speak, our debt to equity ratio is 2.5 times. Capital adequacy we have already discussed. On gross NPA side, our gross NPA have been very stable. It has moved from 1.93% to 1.56% in between 2023 to 25. Net NPA is close to 1%. It is 0.9% in FY25. Financial highlight: net interest income has moved from 649 crore between FY23 to 1,363 crore in FY25. In Q1, we have done 421 crore. On PAT, we have already discussed, so I will skip that. On EPS, it has moved from 11 rupees per share to 3.39 in FY24, 5.8 rupees on FY25, and in Q1, after the equity also, we have done about 2 rupees per share. On consolidated financials, the balance sheet size has moved from 11,794 crore in FY23 to 20,813 crore in 2025. I have already explained that net worth has moved from 3,500 to almost 6,000 crore by June 2026. Borrowing is roughly around 16,000 crore, which we have already discussed. On asset side, we have financial asset of 20,000 crore, and rest is either into non-financial asset of small amount of 300 crore, and plant and equipment is around 344 crore. So profitability we have already discussed for last 3 years, so I will skip that. We have a very distinguished board chaired by Mr. L.V. Prabhakar, who is the ex-MD of Canara Bank. Rajesh, you all know. Mr. Ajit Saran, an retired IAS officer with a long experience of almost 3 decades. Mr. Dogra, he was the head of care rating, again very experienced person. Madam Numpur Mukherjee, she has been associated with HSBC and Barclays, etc. And Mr. Sisir Priyadarshi is again an retired IAS officer associated with World Trade Organization. And Mr. Ranganathan, he was the CFO of Edelweiss as well as associated with Citibank. So very distinguished board. For issue detail, I will request my colleague Vinay to come and explain.
Good evening, ladies and gentlemen. Thank you for joining us today. While Pranav has already touched upon most of the contours of the issue, but I'll just, for the sake of repetition, I'll show you the slides there. We are coming up with our first maiden secured rated listed redeemable non-convertible debentures issue. The base issue size is 200 crores with a green shoe option of another 200 crores, making a total of 400 crores issue. We are having 4 different tenors for this issue: 18 months, 36 months, 60 months and 120 months. And for 18 and 36 months, we are having both options of annual coupon and monthly coupon. These are secured debentures with a security cover of 110% of the outstanding principal and interest amount. The NCDs are having dual rating of AA category, one from Acuity AA stable and Informerix AA positive. These NCDs would be listed on the Bombay Stock Exchange, and depositories, both NSDL and CDSL will be the depositories. Taxation is as per the laws, applicable laws. The issue proceeds will be utilized primarily for onward lending, financing and for repayment of our existing debt, along with some bit of general corporate purposes. As informed earlier, the issue is slated to open next Tuesday, September 30th, and slated to close on 14th October 2025. There is an option to close the issue earlier once it is fully subscribed. This is the most important table, which captures 6 different series which are being offered. 18 months we have both monthly and annual coupons, and 36 months again monthly and annual, and then 60 and 120 months. The coupon for 18 months is 855 for monthly coupon servicing, and the repayment will be done at the end of the tenure, that is 18 months, giving an effective yield of 8.89%. a person who is choosing annual servicing, 890 would be the coupon and 896 would be the effective yield. Similarly, for 36 months tenor, coupon would be 890 for monthly payment, giving an effective yield of 927. And for annual servicing, it will be 9.25 with an effective yield of 9.24. 60 months, we only have option of annual coupon, which is 9.45, giving an effective yield of 9.44. And 120 months, coupon of 9.70, giving an effective yield of 9.69%. Since this is a retail NCD issue, each NCD is having face value of ₹1,000 and minimum subscription is 10 NCDs, which is 10,000 rupees with a further multiple of 1 NCD each. And in case no details are mentioned with respect to the series which is being opted by the investor, the company shall allocate and allot series 5 NCDs by default, which is 60 months tenor. These are the 4 categories where we have allocated the issue size. Category 1, institutional investor, which is primarily the QIB investor, 25% is reserved for them. Then the body corporates and NII category is another 25%, HNI category is 20%, and retail investors are 30%. Trust investment advisors, they are the lead arrangers for this issue, sole lead arrangers. Link in time MUFG are the registrars of the issue, and then the trustee corporates. We now open the floor for the question and answer session.
Yes, Manoj sir, welcome. Yeah, you can. Where is the mic? Yeah, please take the mic, please.
Thanks for the opportunity. So, Rajesh, good to see you here. Super dynamic. Thanks for the sector.
Please take the mic, please.
Thanks for the opportunity. So, Rajesh, good to see you here. Super dynamic. Thanks for the sector. Which is our focus area. That's quite good. Now, a couple of issues. One is appreciate your high growth, but in the presentation, because we didn't get time to see the whole prospectus, we'll go through in detail later. EPS has fallen in the chart. I wonder why is it? Is there a split or something, or is
There is a split of 1:1 and there is a bonus. So one issue became 4.
okay?
Yeah.
Clarify that.
So the chart should be corrected actually. That is not
Yes.
mentioned.
So there was a split and also 1:1. So one share become 4. So
Okay.
that adjustment you have to look into with that aspect.
Oh, actually, so there's a growth part.
So if you see that absolute number of shares have grown up,
Yeah.
and if you look at the profit have become from 280 to 480, and first quarter profit is about 175 crore,
Right.
which indicate if you multiply by 4, so there is a growth in the profit. So there is no that EPS could be down.
I know, that's why I was wondering from the slide, there was no. Second thing is return on net worth. The net worth has grown substantially. That's why your presentation I'm talking about. And return on net worth currently, as per the last year, FY25, is below 10%. As per the PPT, while we are talking about maybe 13 to 17, 18% yields across the different segments, and also very good collections, efficiency, apparently low NPA.
So if you look at our presentation on our website, our last quarter ROE was about 16%, exit of the last quarter itself. However, annualized basis, it is about 12%.
Okay.
Reason being that our gold loan branches have turned around from break-even to profitability during the year.
Fine.
So quarter on quarter, first quarter profit was 85 crore and the quarter we exited was about 174 crore rupees. So that much differentiation have happened when the gold loan branches which we set up have turned around from first gold loan branches of break-even point. So first 15 to 18 months they are in the investment losses phase. Once they achieve break-even, they start giving profit. So this year, all the branches are in profit. That we have seen the last quarter we exited profit about 172, 174. Again, first quarter profit has been this. In the whole year, the impact of QIP money will also be seen in the P&L. So first quarter without QIP money, the profit was 174 crore. So you can do your calculation. And this year, profit will be accordingly, and I think ROE will be very nice. Of course, because of the QIP, our equity base have expanded again.
Right.
But still, QIP, this ROE will be higher than the last year ROE.
Okay. So it should be, so the presentation is not concession with your investor presentation, it talks about 11% plus in terms of return on equity.
Last year you were talking?
As per your presentation you made, if you can show the slide.
It is on the past data, sir.
हार्दिक कौन सी स्लाइड पे?
That summary equity net worth PAT. Yeah, previous one. Yeah, net worth 42,000 crores.
4,200 crores.
Yeah, 4,200 crores. Okay, the PAT is 4,700.
478.
Okay. Next is, this is fine. The provision coverage ratio. Yeah, EPS, there's the distortion.
So last year, full year ROE was 11.8%. Last year,
Right.
FY25,
Fine.
full year ROE was 11.8%, corresponding to that 475 number that you
Right.
number that you saw. What has happened in the first quarter, we have done a 2,000 crore of equity raise.
Right.
So the base has gone up.
Correct.
The net worth has gone up from 4,300 crore to 6,200 crore.
Okay.
On a post-money basis,
Right.
for the first quarter, annualized ROE is 13%.
Oh, great, great.
Right?
So you take the average utilization of money.
Correct. So I think the strong point here is that despite the expanded base of net worth by almost more than 50%,
Yeah.
4,300 crore net worth, we added 2,000. Despite that, we were able to increase our ROE from 11.8% to 30%.
Right.
Because the profitability
Okay.
last year for the full year was 479 crore. For first year itself, we have delivered a profit of 175 crore.
Right. Then your provision coverage ratio, by the numbers, it shows 40%. There are many NBFCs which are having, 60%, 70%.
So it
is it only
depends.
as per RBI resolution or
No,
regulations
so
or?
RBI requirement is much lower, but any case, it depends on sector to sector. So like a company which is funding commercial vehicle at 26%, and with gross NPA at much higher, 7, 8, 9%, they have a higher provision coverage ratio. If you look at our portfolio, 37% is a gold, where your provision coverage ratio should be 10%. What is a provision coverage ratio? Basically, the anticipated loss should be covered by providing the adequate amount through keeping a provision coverage ratio. So your risk will not be higher in the gold, but your risk in the unsecured portfolio will be higher. So PCR is varies from company to company depending on the product we are underwriting. And being our company, entire portfolio 100% is collateralized, secured either by the gold or by the real estate. And so our 40% coverage ratio is also be very robust, keeping in mind collateralized, safe, and within that 36-37% is a gold.
Thanks, and your open rate is in fact quite attractive, and we see that you have got A-class investors. I was seeing some deals by Goldman Sachs and all this month, so it attracts
It's very attractive
top-class
from the
investors,
investor perspective.
both equity and NCD. Wish you all the best
Thank you.
in deep penetration and high growth.
Thank you.
We are running short of time, but yes, we can take few more questions.
Yeah, as you mentioned, as I reconfirm it, okay, it's 100% loan book is secure, not a single penny unsecured.
Yeah, so 100% book is secured by having a collateral of real estate or gold. Even within the secured, somebody is doing a vehicle loan is secured by vehicle.
Yeah.
That book is also called secure. But as far as we are concerned, our book is not only secured, but secured by collateral of either real estate or gold.
Okay, and as you mentioned, you are some 1100 branches. All our branches are physical presence or there is a virtual?
They all are physical branches. Virtual, you can have a number of branches.
Okay, thank you, sir. And once you are mentioned, you are almost you are covering 10 states, right?
Yes.
For disbursement. So you have any idea how many pin codes you are covering from the 10 states?
Pin code number to be exactly.
Okay. Sorry. Thank you.
Hi, my name is Vinay from Darashaw and Company. So Kishore Bhai during his presentation mentioned 4,400 crore is MSME portfolio. Sorry, 4,400 is co-lending. 1,000 crore is co-lending. So I think Q4 last financial year and Q1 this financial year, RBI came up with a guidelines wherein that FLDG 5% FD that the originator creates will not be considered while creating the provisioning for the lender. So what kind of impact you are expecting in the provisioning in Q2, Q3, if you can throw some light on that?
By regulation, we cannot give any kind of FLDG. So the regulation was earlier when you were doing co-lending between REs and REs, which is regulated entity to regulated entity, there was no guideline other than digital lending. In digital lending 2023, there was a guideline which said that you can give 5% FLDG. But on other REs to REs co-lending, there was no guideline where people were taking a view that synthetic securitization is applicable and up to 20% FLDG can be taken. But when an NBFC does co-lending with banks, then by statute you cannot give any kind of FLDG. Now the regulation will change, as we all know that recently RBI has come up with a revised RBI guideline where the NBFC can also give, if they choose to, up to 5% FLDG on co-lending. So as of now it is not going to impact, but whatever portfolio we have created, we have not given any single rupee as FLDG, which is legally also not allowed.
One more question, my name is Arnab from Darashaw. In the construction loan segment that you mentioned, how much is for builder finance and how much is pure construction for home?
So all these loans are for building the houses by the developer in the smaller segment in Tier 2, Tier 3 cities. Our average ticket size of these construction finance loan are in the range of about 15 crore rupees. So 15 crore rupees loan you can imagine one kind of a small developer.
Any more questions, anyone? Yeah, please go ahead.
Sir mentioned the co-lending. So first right will be with the bank or remains with?
It's a pari passu, equal right with
Equal. Thank you.
Anyone else? That's it? Okay. Now I'd like to call again Mr. Inamdar from the Trust Group for the closing remarks. Thank you so much, sir.
This has indeed been quite an enlightening session, and on the closing note I would like to reiterate that Capri Global Capital Limited is coming up with its maiden public issue of secured bonds, and with a base issue of 200 crores and with an option to retain an oversubscription of 200 crores aggregating 400 crores. The effective yield is 8.89 to 9.96 across different categories and tenors of 18, 36, 60 and 120 months. And the allotment will be on first come, first serve basis. And we all are looking forward to a very good support and to support us big time on our maiden public issue. And wholehearted thank you from the management as well as the lead managers. And I would like to thank the management to enlightening us, as well as I would like to thank each and every one of you to be present here and have a very informative session. We would like to invite you to join us for IT. Thank you so much.
Thank you. With this, we conclude the formal session. Please join us for IT if there is anything missing. We look forward to engaging with you further on.
Party is
Thank you so much. Have a nice time.
Beta sir. Smile. Wait sir. We're done. Thank you.
सुरुवातीचा स्पीच काहीच नाही होत.
तो बोलला त्यांना. पटकन पाहिजे चालू केलं ना सगळं घेतलं आणि म्हटलं फोटो तरी फोटो पण नाही नाही असं काय करत जाऊ परत आहे सगळं परत आहे.
नाही संपलं परत काय आता काम घेऊ दे
Yeah.